and we are continuing with the financial management model and the statement of cash flows. The statement of cash flows tracks the sources and uses of cash in your farm business and adds insight to the understanding of your financial position and performance. The statement of cash flows summarizes cash activity over a certain time period, such as a calendar year. The statement of cash flows summarizes the cash activities into three areas: cash from operating activities, cash from investing activities, and cash from financing activities. These three activities might be thought of as three businesses within your farm business. Ideally, the sum of their individual net cash balances should equal the change in the cash position between your beginning and ending time period. If this doesn't occur, it triggers an investigation into why. Let's explore the three cash activities in more detail. When you think about operating activities for your farm, what comes to mind? Operating activities include cash inflows and outflows associated with operating your farm business, such as sales and other income generated from sales of product, along with operating purchases, family living expenses, and income tax payments. When you think about investing activities for your farm, what comes to mind? Investing activities include cash inflows from the sale of assets and cash outflows for the purchase of assets. Did your farm business generate cash from the sale of land? How much cash did you use to purchase land? Often the cash outflow exceeds the cash inflow, so this imbalance is reconciled with the financing activities as additional debt. When you think about financing activities for your farm, what comes to mind? Financing activities is the cash to and from external sources, such as lenders, investors, and shareholders. Your farm business might be funded by incurring additional debt obligations or the repayment of an existing loan's principal balance. The statement of cash flows may or may not be limited to your farm business. Cash may flow into your business as contributed capital or flow out as owner withdrawals from the farm business. To the extent this occurs, it is noted within the financing activities. The structure of the statement of cash flows is guided by the formula beginning cash balance plus cash inflows less cash outflows equals ending cash balance. The statement of cash flows shows the ending cash balances from the end of the time period. The change in cash inflows less cash outflows between the beginning and ending time period should reconcile with the change in cash balances from operating, investing, and financing activities in the statement of cash flows. Statement of cash flows does help your business understand the use of cash by answering the questions on this slide. Where has cash left the farm business? How much cash was spent on an expense? Are there potential surplus or deficit periods during the year? Can the farm business estimate the minimum credit needs based on cash flow? When should loan payments be scheduled to match cash inflows? Is there sufficient cash for capital asset purchases? The statement of cash flows is also useful in comparisons with peers or past performance, such as previous years to current year, or debt payments planned versus actual payments.